Hello, right, today we're going to be looking at an order block strategy. So I have one indicator on my TradingView here, it's called IOBP, this one here, Institutional Order Block Pressure. This is just to identify them quickly. If you don't know what an order block is, it's referred to as a tight range consolidation before you see a big move in either direction. So these little arrows here for this indicate, well, the green ones indicate a bullish order block and the red ones indicate a bearish order block. So as you can see, like let's take this one for example, we have this sort of tight range consolidation here. If I just highlight this here, so just this before we initially see that big move down. Yeah. So with that and order blocks, what we're going to be looking at is trading with the trend initially. This is pretty much what I use in all of my strategies, is the simple moving average of 960, 320 and 60. So blue being 960, yellow being 320 and red being 60. So to identify the trend, what you want to see is the larger of the simple moving averages above, the medium in the middle and the lowest below. And for a bullish trend, what you want to see is the red on top, the yellow in the middle and the blue at the bottom. So as we can see from here, I mean, identifiably we are sort of becoming in a downtrend from previous ones here. However, this is sort of undecided until you get to here. But you know, I'd say here would have been the more clear-cut example. I mean, back here you wouldn't have known necessarily. So there is an instance in which you could have taken this trade, but we're going to be looking at this one right here and what we see. So where we have these simple moving averages that have lined up on the 4-hour time frame, this is all good. So this indicates that we are in the downtrend, and what we're going to be looking for is these order blocks. The main opportunity that we saw here is this one here, and as you can see there is a bullish order block. However, you wouldn't have wanted to take that because again we're looking at these simple moving averages for our trend. We're in a downtrend, so we wouldn't be wanting to take the bullish order block trade that we receive. However, we do have another one here, so this is kind of what we'd want to look for. Again, you wouldn't really notice until after that sort of formed, that order block, that you know we want to take this trade. So it's not realistic getting in here unless you can read price action pretty well. However, we do have this sort of this pullback here, and this is the price that we would have wanted to get in. So again, this pullback, once we see that rejection from, again, if you can see this sort of range that we have here, you know, you can see this level is acting as resistance. Prices attempted to push up past it and rejected back into it, and even attempted again at a retest. So this is again another trade that we would have wanted to take. So we would have just had our entry roughly here, with our stop loss very, very tight on that one. So let's have a look. Ooh, if I can pull it. I've messed that one up. Right. Lovely. So this is pretty much where we would have wanted to have our stop loss, just above this. So that's a very nice entry to get in, and again we'd probably be looking for that sort of 2-to-1 risk reward, which as you can see would have absolutely smashed that one, and it wouldn't have stopped there as well. So again, this shows the importance of, once you do have that hit, that 2-to-1, then moving your stop loss to entry, going break even, and just leaving on a portion of the trade, because as you can see this is just absolutely rinsed off since here. It really has tanked, you know, and you could still capitalize on this trade. You might have potentially been caught out by the retest here coming back up, depending on your entry, but obviously you've got a good risk reward there. I mean, if you wanted to move your stop loss to entry, you could have it on a second take profit. You can literally just adjust this according to your preferences. So you know, you've taken a 2-to-1, so even if you take 50% out and then do get stopped out at the end of the day, you know, you've only lost pretty much nothing. All in all, you pretty much go break even with that trade. However, you've given yourself the chance to capitalize on that, and as you can see, you know, this trade has never actually pretty much come back to that level, well, for a while at least anyway. It always comes back, always comes back. So with this one, you could have maximized that profit potential and actually had, an amazing risk reward, 1 to 54 there. So these trades are totally feasible to take. It's all about establishing the trend, trading with the trend, looking at market structure, looking for these order blocks, looking for that pullback. So as I said, it's made that lower high. I mean, it's a higher high for this mini range here. You can tell this is just a pullback because, again, overall we've got lower highs up here, and this is a lower high in itself to which an order block was formed, and then you see the pullback. Now this pullback doesn't necessarily just come lower than the actual order block. Sometimes this can come up further and then reject it and come back, or just level with it. You just really have to look for the price action, look for the rejection, look for the areas, the levels of support and resistance that this is acting from, and then make your decision based on that. But you can capitalize on some good trades when you're trading with the trend, and that is a good one to do. As always, with risk management, it's the most important thing, even though we've just seen 2 winning trades there, and there's more that you could have taken here. We haven't really seen a pullback on that one, so if anything, you might not have got that. So yeah, that one's probably a bit of a miss, let's say. And again, I'd say these other ones you haven't really seen a pullback. However, if you did stay in this trade, you would have capitalized on that much further, and that would have been a very good trade. So as I said, risk management is definitely the most important thing, as always with trading. Strategies can be super simple, they really can. If you back test it and find that it works, X amount of time with whatever risk reward that you have on that, because if, let's say for example, if you're hitting those 1 to 54s, you only need to win 10% of the time. You could lose 90% of the time and you'd still end up consistently profitable. So it's all about risk management and sticking to your rules of the strategy. Trading what's there only when it's there, not diverging from that. So with the proper risk management, that will always keep you up. With the right trading psychology, that will always keep you up. Strategies definitely can be super simple. It's always just the humans that mess around and mess things up, and why so many people lose money in trading, because it's just the human psychology, when money is emotion, and emotions for the most part rule a lot of people. So it's just something to always be careful of and considerate of when trading.